Welcome to the March 14th, 2022 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman and President, McGowan Group Asset Management, a team of 10 devoted to your success. The term McGowan Group, the name of the firm, actually refers to us as a group of clients and team members brainstorming on a daily basis, deep research, and this broadcast, YouTube McGowan Group, be sure to subscribe because we bring you the best intelligence and investment strategy perspective that you just can't find anywhere else. So thank you for tuning in. Be sure to share with your kids and your parents so they get smarter too. Here we go. U.S. job openings by industry. Well, this is interesting because we hit a record and it was good news. I've got a couple of good news pieces to start the program. Then we'll dive into inflation and the Ukrainian impacts. But 11.3 million jobs posted available to be filled. They're waiting for people to come get that job. That is a record with distance. You can see it just trounces going all the way back to 2018-19, over 11 million now. This is actually great news. Correspondingly, U.S. household real net worth above inflation rising 8.6% over the past year. So, not a recession yet. And I thought we'd start with a little good news to balance things out. Here's the Dow Jones Industrial Average. I put it in a one-year perspective for this week, and there's a reason for that, which you'll see. In this case, we've got about a minus 10 on the Dow year to date. The one-year total return, that includes about a 2% dividend. Going back a year, it's about a 5% return. So very little appreciation over the past year, wiped out obviously by the January correction and then the correction at the onset of the Ukrainian crisis here, the invasion. We go back to the Dow at 32,000. That's about where we went on this chart, but not below it. And you had a bounce, now 33,300 or so at the end of the week. What's interesting about the overall market, you just returned essentially to a year ago. Now on the NASDAQ, it's similar. The NASDAQ 100 is the 100 largest companies in the NASDAQ. That's the tech index. And I'm going to point out something about that index as we go forward. This had an official bear market from here to here. That's more than a 20% correction in the tech stocks. The Chinese stocks, Alibaba and Baidu, really pounded at the end of the week. There's some delistings coming for the Chinese companies because of their audit procedures. But in any case, it's still holding about a 5% return. But the big sell-off has primarily been in the high-flying technologies, which you're about to see. Here, you've got the pipeline index. This is the energy infrastructure we've been discussing. This is the low-cost ETF. And you could see the run-up over the summer. Now we've exceeded that in a chart pattern that most would call a cup with a handle. It's actually a bullish signal. The energy complex, the S&P Energy Index, up 38% for the year, whereas the NASDAQ 100 is down about 17% for the year. Quite a wide variance between energy and tech. We talked about the return to value stocks and income stocks, which this tends to be the highest yielding category in the S&P 500. The one-year total return, 27%. Now, top 10, bottom 10 over the past 90 days. This we look at for a read on what's working and what's not. Obviously, it repeats. Occidental up 88%. Wow, Devon Energy up 38%. You can see this is really a group of energy companies with the exception of Mosaic. Bottom performers, Etsy, PayPal, Facebook, Netflix. You can see the leadership of the market has totally transformed in what we call multiple compression. How much do you pay for earnings? What multiple? And that multiple is coming down as the growth rates on the high-flying tech slows. Here we've got the lesson. We covered this last week, but I just wanted to point out a few key points. The yellow line is inflation. This is 1978 through 1987. That was the record inflation period for the U.S. economy. Interest rates on a 30-year Treasury actually went as high as 14%. Here is the S&P 500. That's the 500 essentially biggest stocks, the blue chip index, if you will. What you can see during this period is not a bear market cycle. You have a correction here that was about 20% as inflation peaked, but over the 2-year basis, it was actually a steady but anemic uptrend. And then, as you see right here, they combated inflation, rising interest rates, but you still had a reasonably good rally. This was 2 miserable years, 1981, 1982, and that says, well, it wasn't disaster, but it was not a time to be all in the S&P index. Big difference back here, the energy complex was a much bigger part of the S&P. That's not true today. So we'll use that forecast to say, okay, it was a headwind, but not a disaster. Disinflation and deregulation and lower taxes led to an incredible rally as the economy grew in 6% in 1982. It's the only time U.S. economy sustained 6% for an entire year in modern history. This is the futures market for crude. At escalation and the cutoff of buying Russian oil spiked all the way this week to 125, settled back to about 108 at the end of the week. And you can see that was the highest since 2008 when oil went to 147. Interesting chart because it comes from minus $40 all the way up to 125. Historic $165 barrel gain before it settled back. What did the markets tell us this week? The financial markets returned the 10-year Treasury to a 2% yield. It went as low as 1.7 at escalation and invasion. The markets right now are behaving as if escalation beyond the tragic Ukraine invasion is unlikely, at least for the time being, and oil settling back down indicates part of that. Now, whether that remains to be true, well, tune in to McGowan Group YouTube and we'll keep you updated each and every week as we go through a substantial change in the financial markets. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.